Good day, good morning, good evening, wherever you are. This is Guy Christian with the podcast Goal 16. Today, we are going to have a special invitee who is a prominent social activist. He is an economist. His name is Mr. Alex COBHAN. Alex is an economist and chief executive of the Tax Justice Network. He's also a founding member of steering group of the Independent Commission for the Reform and International Corporate Taxation, and of the Technical Advisory Group for the Fair Tax Mark. His research focuses on the scale and development impact of tax avoidance and tax evasion, and on inequalities. You know, he has a new book that I got. It's on my Kindle. I don't know if people can see it, but if you do, please buy that book. It's a very interesting book. I'm going to ask Alex to talk about his book briefly. The book was published in December 2019, and of course, Alex is also an author of several written articles. I mean, the numbers are staggering. But it's my pleasure to introduce my friend to you guys. We are going to talk about illicit financial flows and taxes or taxation. Alex, welcome. How are you?
Thanks very much. I'm very well in these strange times, but it's very nice to be talking with you.
Right. Thank you for being here. So let's just dive in. But before we do, you don't mind talking a little bit about your book, The Uncounted, please?
Always happy to talk about the book.
Right.
The book, it's one of those things it's an idea that once you've seen it, you see it everywhere. And so At the moment, I'm seeing it in what's happening with the pandemic, all over the place, really. But the central idea is just this, that we consistently underestimate or undervalue the level of inequality in all sorts of inequalities because we count badly. We don't count wealth and income at the top at all well because of the scale of tax avoidance and tax evasion, because people actively hide what they earn at the top.
Right.
At the bottom, we also don't count very well, and in particular, we fail to count particular groups who are already marginalized in different ways. That includes people with disabilities, homeless people, nomadic peoples, ethno-linguistic minorities, indigenous peoples. And the effect is that we don't understand from the data that we think tells us what the world looks like. We don't actually understand the degree and the nature of inequalities. And so our policies, in turn, are bad because they don't respond to that inequality. And we end up again with even higher inequality. So counting isn't the answer to everything, but when we let things go uncounted, it is political. It's not a coincidence that these people with a great deal of power go uncounted and these people with very little power go uncounted. It's part of the problem. We have to kind of challenge it politically, not just technically, because if we see it as a technical problem, we will always fail to challenge the politics, and it is really about power. So if you look around you today at the pandemic, you see all sorts of things. In the UK, for example, where I am at the moment, the government has data it receives every week on people living with learning disabilities and autism who are dying from the coronavirus, and the government refuses to publish that data. The government prides itself on actually supporting global efforts to count better people who are living with disabilities. But here in the UK, we are refusing to publish even that data we have. All around the world, including in the United States, where you are, we're already seeing that people from Black and minority ethnic groups are systematically much more likely to be affected by the coronavirus and to die from it. But most places are not publishing proper data. They're not counting that properly. And so the effort to respond to it in policy terms is behind because we don't care enough about the data. We're not addressing the policy issue, which is excess mortality that we ought to be challenging. Like I say, once you've started to see this idea, you see it in a lot of places, and
Right.
you get the sense that if we could challenge the politics of counting, it would go a long way to addressing a whole set of inequalities that we face. And the fact that we're not challenging them is because of how strong those inequalities are. We work at the Tax Justice Network to, to have much better disclosure from multinational companies, for example, of where their activity takes place and where their profits are being declared, which is often a different place.
Right.
But it's, we've made a lot of progress, but it is still not consistently public data, because the power that those organizations have, and the big four accounting firms and others who work with them to prevent that data becoming public is very, very substantial. And they know if the data is public, they'll immediately face demands for much more effective taxation. So they're resisting transparency because they know that being counted means for them losing power. And that's really what the book's about.
Okay, thank you, Alex. So let's dive in our subject matter. The books, your book actually is behind you at the top.
It is.
I can see the book right there. So that's just for people to know. So the book talks about a lot of illicit financial flow. So it's a good thing. It's a good reading. So let me, I'll ask you the first question. We'll go to ask you if illicit financial flows and multinational tax avoidance are not the same thing, or if they are the same thing.
So this is a contested question.
Right. That's why I asked you that question.
Sure. So you also know my view, but I should.
Yes, of course I know your view.
When the whole agenda of illicit financial flows got moving, it was really a development of the old view of corruption.
Right.
That very old-fashioned view that says corruption is really a problem in lower income countries. Corruption is the reason why they don't spend my aid money well, for example. Otherwise, my aid money is perfect and would be fixing their problems.
Right.
It's their fault for their corruption, right? So a really old-fashioned and a really kind of poisonous view that puts the responsibility effectively on the victims.
Right.
Illicit financial flows is a new development from that, which is much more grounded in the realities of corruption, but corruption broadly defined. So it's about the set of processes by which, yes, there is grand corruption, there is the theft of state assets in countries at all income levels, in fact, not only lower income countries, but in almost every case, that doesn't just involve people from the country in question.
Right.
It involves a whole series of international actors.
Banks, the
enablers,
enablers,
companies, accountants, the enablers, yes. Lawyers and so on, and also the jurisdictions where the money is then shifted to. And that's exactly the same pattern on the tax side. Whether we're talking about undeclared offshore assets being held in foreign bank accounts, for example, or we're talking about the shifting of profits by multinational companies, it's the same channels, the same processes, and ultimately the same effect, which is to say the country that the money has come out of has less money, and particularly the government has less revenue or less assets to use for development for the good of its people. And at the same time, the system of the state, and if you like, the trust in institutions, has also been corrupted. So that governments are less likely, even with the resources they still do have, they're less likely to do things that are for the good of everyone. What you get is this kind of twin impact: less money and less likelihood of it being spent for the good of people, all through the same channels. Now look, multinational companies and their advisors, the big four accounting firms, for example, will tell you that what they do is not an illicit financial flow, that they are not doing tax evasion, they're doing tax avoidance, and it's legal, and so this shouldn't be seen in the same breath. In some ways, I think it doesn't matter, right? As long as we address all of these things and recognize that, they are different, although they operate often through the same channels, they are different, and we can address them differently, fine. But in fact, the same people who will tell you that the illicit financial flows target in the Sustainable Development Goals should not include multinational companies profit shifting, are also arguing that the United Nations should not deal with corporate taxation. So in effect, and this is OECD countries, particularly your country, and
Of
that
course,
the country
yes,
you're in now,
I know,
and my country.
My country, yeah, of course.
Making the argument that actually the UN should have no role in this. So they're not just saying multinational.
It's our government. It's our government. It's not even our country. It's our government. But again, to a certain extent, it's the country because the government represents the country internationally. Right. I agree.
I mean, we don't always want to take responsibility for our own.
No, definitely, definitely. But I was going to ask you this. I mean, before you continue, I know the last time I had Ton Cardamon on the show, I asked him, a specific question because I wanted a U.S. person instead of me making just the argument about the U.S. position on illicit financial flows, right? But I'm asking you to put the same question now with respect to the UK government. What is their position?
So the UK government has moved position over time. At the moment, it's fairly unhelpful. So on the one hand, within their international development work, they have a focus on tax and on illicit financial flows that is relatively positive. They see the importance of the issues. At the same time, in their public statements and certainly in their policies in terms of how the UK itself and our network of crown dependencies and overseas territories, how they operate, the UK is really, with its network, the biggest global problem in terms of financial secrecy and promoting profit shifting.
Right.
So it's really incoherent. When people talk about policy coherence for development, the UK's position on international tax is kind of the prime example of the opposite. So it's a difficult one at the moment. There was a moment that the UK, saw itself as a leader on these issues, certainly on tax transparency, under David Cameron. That's really gone now, and the UK is quite often a big part of the problem.
Okay, so is tax avoidance illicit?
At the very least, some tax avoidance is illicit.
Right.
But when the Big Four talk about this, they want to say there's a very clear line between evasion, that's illegal, and avoidance, and that's lawful. In fact, that's not true. Right, so this is the first kind of real argument against this. Actually, tax avoidance very often is unlawful. What it takes is a legal challenge, a government, a tax authority that's willing to take it to court and get a judgment. On that day, there'll be a group of lawyers from the government and a group of lawyers from the multinational, and they'll walk into court. At the end of the day, one of them will have been wrong. One of them is saying it's lawful and the other saying it's not. One of the problems we have then is that court case for the same tax avoidance scheme, let's say, that court case is much more likely to happen in a high income country where the government has more resources, more capacity, and perhaps more political will to pursue it than in a lower income country. So if we say only cases that have been through a court and have been found to be unlawful are illicit, what we're saying is, we're creating a definition that is systematically less likely to identify the same behavior as illicit in a lower income country. Now, given that we know from the estimates, lower income countries lose a greater share of their tax revenues to illicit flows, that would seem a ridiculous decision to make. So that's one piece. And here's the second piece. When the United Nations, all of the countries of the world, in effect, agreed in 2015 to have a target to cut illicit financial flows, they were talking in that political process about a definition of illicit financial flows that included multinational tax avoidance. Now, how do we know that? We know that because it's there in the public record. The two key pieces of information that fed into that decision. One was the really groundbreaking work that the African Union Economic Commission for Africa panel on high-level panel chaired by Thabo and Becky on illicit flows out of Africa. The
Mhm.
work they did was, really set the stage for all of this. And if you read that report, it is about 2/3 of it focused on the tax avoidance of multinational companies. There is no way that anyone could argue that's not what they were talking about.
Right.
And then the second high-level panel is the high-level panel of eminent persons looking at the post-2015 framework, what became the Sustainable Development Goals, reporting to the United Nations Secretary General. And that included David Cameron and a set of other world leaders. They are clear that multinational profit shifting is a key part of the problem. And the only place in the framework that they propose, which actually is very close to what was then adopted, the only place that that multinational profit shifting fits is under illicit financial flows.
Right.
So when that was agreed, it's clear that what all the governments of the world were agreeing to was a target to reduce illicit financial flows, understood to include multinational tax avoidance. Since then, people have tried to unpick it. And, obviously, countries like the US and the UK, Germany, that have a lot of global multinationals, don't like to see them caught in the talk about illicit financial flows. And of course, the multinationals themselves and the big four accounting firms have a lot of lobbying power to push that argument. But they are really trying to rewrite history. They can say it should be changed, and that's fine. We can argue about that. What they can't do is tell you that what was agreed did not include multinational tax avoidance. It very clearly did, and that's that's the target that the world now has.
Now, why is it a debate on the definition of illicit financial flow? Why is that? I mean, for some people, is important. For others, is not that important because they are just falling in the category of those who like to broaden that definition. So, what are your thoughts on that?
So this goes back really to the thesis of the uncounted. The reason we're still talking about the definition of illicit financial flows is because for some people with power, it is convenient to do so.
Right.
They want to unpick what was agreed because they don't like the potential threat to their power, to their profit-shifting behaviour. And and honestly, I don't think we should accept that. And at the very least, we should.
I agree.
No.
I definitely agree with you. Definitely.
Just, one last point perhaps is just on the definition.
Sure.
If you look in any dictionary under illicit, well, no, let's start with illegal. Illegal says forbidden by law.
Right.
And then you look at illicit, and it says forbidden by law, rules, or custom. Now, what that means is illicit is broader than illegal. It includes things that are effectively socially forbidden, not just criminal. And I think it's very clear, and if you look at public surveys in countries around the world, it's pretty clear. Profit shifting, that kind of aggressive tax avoidance, even if it's legal, is seen as socially wrong. It is antisocial behavior. And so it's clearly, in that sense, definitionally illicit, even if sometimes it's legal. So I just, I really feel we shouldn't kind of allow ourselves to be pulled into this trap of discussing the definitions, because I think it is just it's a way of trying to muddy the waters.
I know. I could not agree more. All right. So in the past 2 decades, right, the debate on international taxation has changed considerably. One would say. So while the tax is still biased, it's biased against the governments of developing countries. The politics move in their favor sometimes. One could argue. But my thing is, do you think tax cooperation between tax authorities in developing countries and the Western countries, does that help the developing countries to protect their tax basis?
When it's effective, it's effective. I think the problem is we have a great deal of activity
Right.
that is called cooperation, which is not very cooperative and not very effective. So I think we have, as you say, over the last 2 decades, we have moved a great deal in the right direction. And, perhaps I can talk about a couple of particular areas where that's true.
Right.
But we've also reached a point where it's clear that the old power structures are still in place. And so that cooperation is really much less effective than it should be. So if I can give 2 examples, we talk about I should say that the Tax Justice Network was officially established in 2003, and it had been kind of informally going for a couple of years at that stage. Now, in the first couple of years, we set out what we now call the ABC of tax transparency, and this is sort of key policy platform. At the time, talking to people at the OECD or the governments of high-income countries, the International Monetary Fund, they just said, this is completely unrealistic, all of this. Once you'd explained to them what it actually was, then they said, this is unrealistic, this will never come to be. Right. And actually, by about 2013, it had become pretty much the agenda on tax of the G20 and the G8 countries, and the OECD had been forced to pick up quite a lot of it. The problem is they haven't delivered any of it, in a way that fully includes lower income countries, non-OECD members. So the A is for automatic exchange of financial information. And that's about this annual exchange of information that we now have under the OECD Common Reporting Standard, information about the financial accounts of tax residents of another country. So Switzerland, famously was forced by President Obama to agree to provide annual information exchange about US tax residents with Swiss bank accounts. And that opened the door to this multilateral process, because until then the US had always opposed, and so it couldn't move. When Obama forced the Swiss, then everyone said, okay, we can do this, we can have this information too. And that's, that was a long-term proposal that we've made. But there's about 100 jurisdictions now take part in that. Most of them, most lower income countries are still excluded. And the ones that are signatories still don't get data from a great many countries. So Switzerland still picks and chooses which signatories it will include. The effect is most high income countries get this data automatically from the big financial secrecy jurisdictions, the big tax havens. Most lower income countries do not. Even quite large developing countries do not get this data still. And small countries have no chance. Now that's broadly mirrored on the C of the ABC, which is country by country reporting. Right. So this was an original idea that we put forward for an accounting standard for multinationals to have to declare not just their global consolidated profits, but in each country, the amount of economic activity they have, the amount of profits they're declaring, and the amount of tax they pay. Right. In order that you can see, very clearly, if all their activities are over here and all their profits are over there, well, maybe we'd like to ask some questions about this. Is this, is this being achieved in an honest way, or is there something we should challenge here? Right. That information there's now an OECD standard for that, and that information is provided to tax authorities in the headquarters country of large multinationals. And then there's information exchange arrangements to provide it to other countries. What happens? Well, it's just the same as with automatic exchange. Actually, it's worse, but the same pattern. Most lower income countries, even though they jump through the hoops that they're supposed to jump, do not get that information. If they do get it, it's often late. It's well after the year that they would have done the audit, so it's less useful anyway. But most of the time, they don't get the information. Even though that information is now available in some sense, we've challenged the power and we've created this transparency vehicle. It's not being allowed to go to lower income countries that are politically weaker. So again, we're in this position where we're halfway there, but it's the wrong half. actually the progress that's been made in these areas may so far have actually exacerbated the global inequalities in taxing rights that we see, instead of making them better. Now, I do feel we are on the right road. Nobody can say this information is not useful or valuable, but we have to keep pushing. It must include lower income countries. Otherwise, we're saying this is really about helping OECD member countries raise their revenues and forget everyone else. And that's that shouldn't be acceptable to anyone.
So let me ask. There's a question about. We already talked about it earlier. The difference or the differentiation between the corporate tax evasion and corporate tax avoidance. I mean, that whole debate in the Western world. But my question to you was going to be, how does that influence developing countries, or how is it important for developing countries?
So, I mean, the estimates that we've done, and others, academic researchers, but also researchers at the International Monetary Fund and the United Nations Conference on Trade and Development, are pretty consistent in finding that tax avoidance by multinational companies, whether lawful or unlawful, and whether illicit or licit, has a bigger impact on lower income countries. It takes a higher share of their tax revenues. And the global scale is perhaps in the range of $500 to $600 billion a year, and maybe $200 billion is being taken from lower income countries. So it's a smaller share in absolute terms, less than half of the global total, but a much bigger share of individual countries' tax revenues for lower income countries. And so that's, I think, where I would start. Those numbers are the most solid that we have in terms of how big the losses are. So I think if you were saying, it would depend, we have detailed country level estimates, so you could look at the individual case. But in general, for a lower income country, I think in most cases it will be that multinational profit shifting is the biggest revenue loss. And therefore, that's where I think you'd start to focus. The question of tax evasion through holding undeclared offshore assets, bank accounts, and more, is one that the estimates again that we have, particularly where in this case where we've either got global estimates using somewhat rough measures, necessarily relying on assumptions, because of course all of this is deliberately hidden, or where we've got leaks. So, for example, the leak from HSBC Bank in Switzerland was very revealing. It's a small piece of the global puzzle, but the pattern was very clear. Even for a bank like that, that's overwhelmingly in high-income countries, the losses, when you calculated the undeclared assets and income streams, the losses were much higher as a share of GDP in lower-income countries, and so even more higher as a share of their tax revenues. And so that kind of seems consistent with the pattern, but the uncertainties around offshore assets, I would say, are rather greater. We have quite good information now on multinationals, despite their best efforts. And so I think if you were saying we have to prioritize one of these for capacity reasons, I think in most cases you would start with multinationals. You'd say this is the biggest revenue loss in all likelihood that we face. And and we have some tools. If we can start demanding this information, country by country reporting, even if we ask for it to be provided directly to us instead of waiting for this information exchange process that may or may not work, then, and you can require it to be filed locally, as China, for example, does, and Vietnam and a number of other countries. Then you say, right, we're going to use this to construct, if you like, a completely different approach to taxation and draw a line under how far you can shift profits from the activity that really takes place here. So that's, I think, a pretty positive potential there. And if you look at groups like ICRIC that you mentioned, the Independent Commission for the Reform of International Corporate Taxation, they've talked about the idea of, basically of doing that, of taking country by country data and really drawing a line to limit the amount of profit shifting, even before there's international agreement. I think just for countries to be able to protect some of their revenue base against the predations of multinational companies makes a lot of sense.
Right. Now, this question actually, this series of questions requires short answers. Okay, I made them that way, right? So, the first one is the OECD helping Africa for the mobilization of its financial resources? In your opinion?
The OECD has tried to do its best for non-members, but ultimately it's a club of rich countries and it responds to the politics of rich countries, and it simply isn't able to push through the kind of changes that the rest of the world needs. So I do think we're at a point when the responsibilities the OECD has need to be moved into a UN forum. We need truly global tax rule setting.
Good. Now, what about the IMF and the World Bank or the BRICS?
Look, the IMF and the World Bank both, I think it's fair to say, have, in terms of their policy research, really come to much more progressive places in the last 5 years or so, and they should be commended for that.
Okay.
But at the same time, most of the policy advice still seems to be the old consensus.
Right.
Don't worry too much about taxing income or profits or capital gains. Think about things like introducing VAT, that tend to be regressive and put the burden on lower income people.
Of course.
And that really seems very hard for those institutions to get beyond, even though when you talk to the researchers, they're very clear that that's a bad way to go. So I think we're still waiting to see the policy advice catch up.
Now, one of the reasons why I asked you that specific question is because, my opinion is just my opinion. Who am I? It's just me, right? I don't think the OECD is helping Africa per se. They're pretending to. So they will act with little projects like Inspectors Without Borders that you wrote about, where that got financed by one of the big firms, right? How can you be asking someone to advise countries how to be effective in their taxation policies and recovery when the person who is financing this work is actually the person at the end of the order cord manufacturing every single mechanism in order to avoid taxes to get paid? It's just ludicrous. That's my take on that. And the other reason is the OECD, if they were that competent, they would have found ways to help European countries and the US to recover all these billions of dollars hidden overseas in tax havens. You had a last piece that came out that your organization published, the cost of the axis of tax avoidance to the European Union. $27 billion. But where is the OECD? Where are they? Where are they? What have they done? Nothing, nada. They have done nothing.
Okay. It's not like me to do this, but I do want to defend the OECD.
I want you to. I want you to be the devil's advocate.
No. Yeah. the OECD, are good enough at advocating for themselves.
Right.
But I think it is worth thinking through some of the problem that they face. There are lots of very good people in the OECD who understand the problem and, given the opportunity, would be fixing it. but they are constrained, as you know, as everyone is, by the politics.
Right.
If we understand the politics that stops the OECD itself from being better, we understand a lot about the global problem.
Right.
Because what's underlying it is this. You know, you've just highlighted that report that exactly shows that the EU, the European Union, members lose billions and billions of dollars every year due to the tax haven behavior of their own member states, right? And so, you know, it's this kind of completely antisocial behavior that happens even within the economic bloc of the European Union, and which they seem powerless to stop. Well, of course, they're not powerless to stop it. And the EU is a much more coherent bloc than the OECD. So actually, if it was going to happen anywhere, you'd think it would happen there. The problem is this. Too many countries have a political narrative which runs on the following lines. These big multinationals that may not be paying all of their taxes elsewhere are national champions. They are our multinationals going around the world, and if they're successful and they dominate in the world, that's good for us. And secondly, they're paying their taxes here, and that's all that matters. Now, the effect of that is that when the EU or indeed the OECD talk about making tax changes that would see multinationals pay significantly more, they face enormous lobbying from their own multinationals, making those 2 points. We are your champions and we pay tax here. Don't hurt us, because either you're hurting your national champions or you're going to reduce your own tax revenues, or both. Now, in fact, all of this is untrue, but it's such a well-told and repeatedly told story. You know, the reason German multinationals are one of the biggest objectors to public country-by-country reporting is precisely because they've told that story so well, but they themselves know they're not paying a lot of tax in Germany. Right? Germany is losing out just as much as everyone else is from the profit shifting of German multinationals, perhaps more so. That's the same in the United States. And that's, you know, the other big obstacle. If we had this information in the public domain, and this is why they don't want it in the public domain, the German public would be saying, hang on, these guys are not national champions. These guys are the worst. They are the ones costing us the most money. Fix the international system now. Right? But that's the political dynamic. As long as, you know, the United States goes to the OECD with the position that they need to defend US multinationals, regardless of whether they're paying any tax in the US or anywhere else, we get stuck. Okay? But this is one more reason to take it to the United Nations. We need the full range of countries involved, including those that don't have this problem of kind of their own political dependence on multinational companies at home. So we have to break beyond this. But I do think, just to finish on that and going back to the uncounted, if we get country-by-country reporting consistently in the public domain, I think this problem will be solved very quickly, because the public outrage at seeing company after company not paying tax at home, never mind anywhere else, will be a game changer. You know, political attitudes will shift very quickly. And then, you know, then I think all things become possible.
So how could developing countries, you know, how could they do to fix the taxation of their natural resources? Or in other words, how could they take control over the taxation of their natural resources? Because you and I know that it's a big problem, it's a big issue. So what ideas do you have?
So, I mean, natural resource taxation raises some different questions from standard corporate taxation, but not necessarily any greater complexity. And the problem really, as in tax more generally, is political rather than technical. We are now in a position where natural resources technically can be valued fairly straightforwardly before they leave the country. And so for countries to say, we will simply insist on a fair share of the value of this before it's taken and before you make any profit selling it, and that piece that's kind of easier to manipulate, we'll just insist on a high royalty share of the real value, it wouldn't be difficult and wouldn't be, controversial. Particularly, it's difficult to argue against that. But we're stuck in a system where countries tend to take a share of the declared value of natural resources,
Right.
and the declared value is very often much less than the market value. So that's one piece. And then the second piece is much more like the more standard corporate tax issue.
Mm-hmm.
What we really need is to tax on the share of profits that should be due in a country, rather than the amount of profits that's declared by the company.
Mm-hmm.
So assess profit not at the level of the subsidiary down here, where it can be manipulated,
Mm-hmm.
but at the level of the multinational as a global group,
Mm-hmm.
and then say, okay, we are, as a country, responsible for 10% of the employment, 5% of the sales, and 40% of the natural resources that go into making that global profit. And so we'll take a share of that profit as tax base in proportion to that share of the activity. None of this is, is rocket science, or none of it terribly complicated, but it requires a level of political will. Again, if we have full country by country information in the public domain, I think it's much easier to get that.
I was going to ask you another question with, within that context, because I think we, the thinkers, so civil society and social scientists, we have to come up with innovative ways to think about taxation. Here's something that I always think about. If we could eliminate the possibility for multinational corporation to deduct their so-called intellectual properties, because that's where some of the money is funneled through pretexts, right? Where they pretend to have all these loans. I mean, look, I don't care how much loan you have. I don't care how much royalties, how much licenses, how much intellectual properties. That's your problem, right? You are a company working, for instance, in DRC, Democratic Republic of Congo. Your total net revenues are $17 billion for the year. We tax you first. We don't care where the money came from. You generated that money here. We don't deduct nothing, nada. We take it. The rest of your money, you can deduct whatever you want. That's your problem. It has nothing to do with us. Our taxation system has to be that way. Because look, to be fair, tax is only fair when people don't abuse all these schemes where you and I know that that's why tax lawyers get paid the big bucks. But I always wonder, when I went to law school 20 years ago in Miami, in my taxation class, I was like, okay, so all these guys that I'm sitting down here with, we are all here getting this specialized training just to go screw, excuse my language, excuse my French, just to go handicap the resources of different government. Basically that's what we do, because they show us how to scheme, to put mechanism into place, how to avoid taxes. Then at the end of the day, I'm like, for all these years, I'm like, look, to avoid all this lobbying, all these shenanigans, is simple. We remove every single deduction that exists. Number one, well, every country is free, must be free to decide its own taxation policies, right? So what is fair for us is necessarily never going to be fair for the investor, because he's there to make money. He's there for profit. But we as a country, as a government, we must also tax you in order to finance the development of our people. It's unfair to us for you to extract all these natural resources from our soil and take them away and give us nothing. That baffles me, So what you're saying is the realistic way of trying to do the things. But I also think that we don't have to, because at the end of the day, it's not like when you think about it, the way you operate right now, all this government, African government, and all these developing countries, government, they, first of all, they steal so much money from whatever they're getting paid that at the end of the day, it doesn't even serve the population. Whatever they are mobilizing for this from this corporation. So you wonder, you're like, look, if you don't want me to tax you the way I want to tax you, don't come. Go make money somewhere else. Don't come. Because the amount of money that you are giving me is not even sufficient for me to take care of my people. Okay. If, that's if the government is an honest government, like the one in Botswana. You know, I mean, that's the only, with respect to Africa, that's the only government that I can target, I can cite, because I know they have good example. They have done so well with their mineral resources. But the rest of them, I don't know.
You know, one of the things we don't talk about enough, I think, with tax is the importance of taxation for political representation.
Right.
You know, it's not a coincidence that lots of countries with high value natural resources end up with, in a sense, bad governments. It's not because uniquely bad people live in those countries.
Mm-hmm.
You know, it's because, you know, almost the only thing that we have good evidence that systematically improves the quality of governance
Right.
is the reliance on taxation.
Mm-hmm.
The bigger the share of government spending that comes from tax, the better over time is the quality of governance. When you are reliant on aid, high levels of aid for a long time, or natural resource wealth, you don't get that effect, right? People don't like paying tax. So when they pay tax, particularly when it's visible to them, they're annoyed and they hold the government to account. They say, that's my money. What are you doing with it?
Yeah, what
And
are you doing with it? Right.
That process is what makes government better.
Yeah.
When we don't have that, and you know, anything the government does feels like it's, you know, free money. They're just doing something nice for us.
Mm-hmm.
You know, we'd like them to do it better, but we're not annoyed enough to care enough.
Right.
So one of the issues for natural resource rich countries is how you encourage a government that, in a sense, doesn't want to annoy people because it wants to be re-elected, but needs, in effect, for the longer term, it needs to tax them more. Right. In order that they feel annoyed and hold them to account, and that they be better as a government. So there's a difficult dynamic there, but it's not an impossible one. You know, we've seen a lot of countries that have managed it. You know, not only Norway, it's kind of, there's a broader pattern, that have managed to introduce good taxes and, you know, over time built stronger, better political representation.
Yep.
But we need to have it in mind. I think, you know, going back to your earlier point about, you know, saying to investors, if you're going to come and make money here, then some of your profit is going to stay here in tax. Shouldn't be controversial. And we know, you know, everyone agrees.
I know.
Like, you know, McKinsey's and the Tax Justice Network don't agree on very much, but we agree on this. Tax incentives are not very important to investors. If they can make a profit, they'll come anyway. And if they can't make a profit, then they won't come anyway. So, you know, if you've got a profitable place to work, then they're going to come, and they're
going to come no matter what you do. They are going to come. They'll be knocking at your door. You just have to be smart. You know how you do these things. That brings me to the next point, because it's going to take the rest of the time, because I wanted to answer a bunch of questions, but I don't think some people don't like to hear about these things because it annoys them that we are trying to make this world better, but it's their problem. We don't care. The Secrecy financial index, right? A lot of people are not familiar with it. I was mesmerized the first time your organization launched this index, because I always wonder, most Africans know the CPI, which is the Corruption Perception Index. But since we started redefining and the concept of illicit financial flows came out, I was inclined, you know, at the time I was wondering why we don't have, because I was seeing this disparity, right? why we don't have a something equivalent to the corruption perception index, but for this illicit flow, financial flows. And the organization, boom, sees saw the opportunity there and created the SFI. So I'm very, 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 very proud of what you guys have done. Kudos again to your entire organization. But for the purposes of our discussion, I want you to elaborate a little bit by telling the audience what it is.
Sure. Well, so look, you're presenting that exactly right. The Corruption Perceptions Index, in some sense, is kind of very much the old view of corruption. It's based on surveys of international business people and others about where they think places are corrupt places to do business, really. So it doesn't have much to do with the experience of corruption in those countries for normal people. Mm-hmm. But equally, it doesn't have much to do with the broader issue of where corruption is driven
right.
by. And so the Financial Secrecy Index, and more recently, we've introduced the Corporate Tax Haven Index right. alongside it to kind right. of capture the other piece of the problem.
Congratulations.
What they're both doing.
Yeah.
Well, thank you. I mean, we're kind of, it feels like these are numbers that drive change. Every time they come out now, there's more.
I definitely agree. Yeah.
It's to hold jurisdictions to account seems important, and this is something that measures their contributions to the global problem. Mm-hmm. But what we do, the Financial Secrecy Index is based on 20 indicators, mm-hmm. each of which has a set of subcomponents. So there's kind of more than 100 variables in there that capture everything from whether they're exchanging information with other countries about financial accounts, bank accounts, for example, to whether they have company accounts in the public domain, whether you have to register who the owner of a company or a trust or a foundation is, how well you cooperate internationally with judicial matters, broader transparency stuff. So it's capturing kind of all the elements of being a tax haven, if you like. Mm-hmm. And what it means is you can see, very quickly, if you're a country at the other end of this, take DRC, right? If you're looking at where your direct investment is coming from, where your bank flows, your portfolio investment, your commodity trade, if it's with, I don't know, France, then, probably okay. If it's with Norway, okay, looks all right. If it's with the British Virgin Islands, bells going off, right? This is much higher risk because of the secrecy that's involved. And so it gives you, based on objectively verifiable criteria, not people's perceptions, but something very real, it gives you a measure of effectively how much of a global threat each of these countries poses in terms of driving corruption and tax evasion and tax avoidance. And so, in that way, it's trying to kind of to turn around this old narrative that corruption is a problem of lower income countries and actually saying, well, no, illicit financial flows are driven by the behavior of secrecy jurisdictions, most of which are relatively high income financial centers. And if we want to solve the global problem, we can't point the finger at low income countries. We have to start with these big centers, these big profit shifting centers and these big centers of financial secrecy.
Good. So now, before we finish, quick and last question. Do you think we are going to make it for 2030 with respect to the goals of illicit financial flows?
So I don't, but I don't want to be entirely negative.
Me neither, but optimistic.
The very fact that we have a target to reduce illicit financial flows is progress. It's a great frustration to me that 5 years after we set that target, we still don't have agreement on the indicators that we will track. Right. And that means we don't have policy addressed to making that target happen. But we're getting there, right? We're making progress with the indicators for SDG 16.4. I do believe, if not this year, then in 2021, we will have agreement on the indicators and we will begin to track. Now, I don't think we can expect to see significant progress that we can demonstrate on that basis before perhaps 2025.
Mm-hmm.
So by 2030, I think we will actually be seeing, I'm an optimist, I think we will be seeing visible progress in reducing illicit financial flows. We won't be anywhere near the end of the road. And I fear, for all the political reasons we've talked about, we will see greater progress first in the countries that need it least. That's to say, in high-income OECD countries,
Mm-hmm.
we'll see a reduction in things like the scale of profit shifting before we see that in lower-income countries. But that goes back to, are we going to see this driven through a UN forum, or continue to hope against hope that the OECD can do something good for non-OECD countries?
Mm-hmm.
That's the big challenge now. It's shifting the politics of this fully into a UN forum, and we're making some progress, but that's a slow road.
Well, we should stay hopeful, but we also have to be very realistic, because I don't see that happening. I mean, I hope someone would tell me something different. But Alex, COBHAN, thank you for this wonderful conversation and insight taxation with respect to illicit financial flow goal 16 or SDG 16. It was wonderful talking to you, and I know I will stay in contact and touch with you, because we have so much to do together and with your organization, because a lot of things that I use, materials and information and data, come from your organization. So kudos for all your programs. By the way, Tax Justice Network has a couple of podcasts. If you are interested to follow them, you can listen to those podcasts in French, English. I think they recently launched one in Spanish, and also just launched a website, Tax Justice Network Italia, I believe. Right, so congratulations for that. And we as a international civil society and social scientists, we are going to continue to push the envelope until this world becomes a better place to live. So with that, I say to my friend again, thank you. Enjoy your weekend. Stay safe in the UK. We are staying safe here in New York. And until we meet again. Okay?
Well, thank you very much. That's been a great conversation. I feel I have to say there are also taxcasts in Arabic and Portuguese.
Right. Oh, okay. Okay. Yeah. Definitely. Yeah.
There is a global movement now, and anyone listening to this who's interested can find a place to plug in their country, in their region. And we need your help. So please do.
Yeah.
Look, thank you very much. I've really enjoyed talking to you, and let's do it again.
Thank you.